Hi everyone, let's go over my bullish and bearish Elliott wave scenarios on Bitcoin, starting with the bearish scenario where we're looking for a zigzag 535 to the downside, after which we look for continuation to the upside. Currently working on wave C, which then internally is a 5-wave structure where the most common target for your wave C is between the 1 and the 1.236 trend-based fib extension taken from the start to the end of A to the end of B, giving you a target between 54.6k and 50.5k. In a bit more detail, this is what we're looking for: a leading diagonal in wave A, 1, 2, 3, 4, 5, zigzag to the upside in a wave B, and then another impulse to the downside, 1, 2, 3, 4, 5, currently working on this wave 4. The common target for your wave 4 is the 0.382 to the 0.5 Fibonacci taken from the start to the end of wave 3, giving you a target area between 63.5k and 65.2k, which is where we are at the moment. The invalidation is quite simple, that is the low of wave 1 at 66.2k, because in an impulse 1, 2, 3, 4, 5, you don't want to have overlap between a wave 1 and a wave 4. If price moves towards the upside and touches 66.2k, it increases the probabilities for more bullish scenarios. If we then zoom in to this wave 4, we want to count a 3-wave corrective structure to the upside on the 1-hour time frame, labeled here as a zigzag. 5-wave A to the upside, a leading diagonal because of all the overlap here. 3-wave corrective move to the downside in wave B, touching the golden pocket in confluence with the additional support that we had over here, the 1-hour gap and the 1-hour order block. Very nice. And then we're looking for a wave C to the upside, which is an impulsive structure, 1, 2, 3, looking for a wave 4 still to come, and then a wave 5 to the upside. The common target for your wave C is between the 1 and the 1.236 trend-based fib extension taken from the low to the high of A to the low of B is 63.9k to 64.8k, which is an interesting confluence with the box that I have on the chart here, 64.1k to 65.1k. After this wave C, we're then looking for price to move towards the downside and create new lows. The invalidation on the chart is price moving below the low of this wave 2, as long as we don't have a significant range in a wave 4. Now, most commonly, a wave 4 is at least similar, if not longer in time compared to wave 2. So what I'm looking for is a range to form that is going to be quite similar compared to this wave 2, or longer than one more high to the upside in a wave 5. Of course, it is no problem for price to move towards the downside as well in the meantime, as the most common target for a wave 4 is between the 236 and the 0.5. So if the high of wave 3 is in, because we don't know, right? It's always very difficult to know exactly when a wave 3 is finished. But if this over here is your high and we would start a wave 4, then this is the common target area for your wave 4. So it's no problem to see price move to the downside, but if it hits the 618 at 61.8k, it invalidates a wave 4. So that is something to keep in mind. And if price is moving to the upside after all these short ranges, the fibs simply move to the upside as well, as you then take the fib from the low over here of this wave 2 to wherever the high is going to be, until we create a bigger sideways structure. On the daily time frame, the bullish scenario is a finished WXY double combo. So this is a complex corrective structure with a regular flat in W, expanding flat in X, zigzag in a wave Y. Common target for wave Y is hit, which is the yellow box here, 63.2k, 54.4k, trend-based fib extension from the start to the end of W to the end of your wave X. What does impact the probabilities for this scenario is your wave X here, because your wave X is an expanding flat ABC, and your wave C is very long compared to your A plus B. So you see a fib time on the chart, the 2 fib time here, taken from the start of A to the end of B. You can see that your wave C here is over twice the length of A plus B, which is not common, right? That's a very uncommon wave C in length in time, which is not really what we want to see and does impact the probabilities for this particular scenario. And also we have on quite some charts a truncation in C. Now some charts did take the high over here on the left, some charts didn't, but on some charts we have a truncation, and that's of course not really what you want to see. But at the same time, in a more bearish scenario, if we are counting this a 1, 2, 3, on some charts we have a truncation, and on some charts we took the high, which would be an invalidation for this impulse to the downside. So we got to take it with a bit of a grain of salt in both of these scenarios. So most importantly is the time of your wave C, but this is absolutely a valid scenario here. But then on the lower time frame, if this is your low, we want to count impulsive structures to the upside. We definitely want to see 66.2k hit to also invalidate the bearish scenario. Now here, in this case, we then want to count this a wave 1, 3-wave correction in a wave 2, another 1, 2, working on a wave 3, and then still have 2 more pushes to the upside. So we then look for a wave 3 to finish sideways 4, then a 5 to the upside. And in the bearish scenario, we then continue down, but in the bullish scenario, we want to see another corrective structure in the blue 4, and another push to the upside in the blue 5. That means that preferably your wide wave 4 is quite similar in length compared to your wide wave 2, and your blue wave 4 here is quite similar in length in time compared to your blue wave 2. So we want to see a bigger sideways range. Now, a minimum target for wave 3 is commonly the 1.618 trend-based fib extension taken from the low to the high of 1 to the low of 2, sitting at 66.4k. So that would also invalidate the bearish scenario where we're looking for an ABC and a move down, because 66.2k is the invalidation for that impulse to the downside on the daily time frame. If we look at the volume, we do have a bit of a volume increase, as you can see, as price is moving to the upside. Of course, preferably in this impulsive structure, we see this continue. The volume is nothing to write home about at the moment. You can see the volume over here was actually a lot higher than what we have at the moment. So arguably, your volume is moving to the downside still. And if we are looking for an impulsive wave 3, then preferably your volume starts to increase. But what is most important for me is going to keep an eye on these wave 4s here. We want to see a 4, 5, 4, 5, and preferably wave 3 hitting that 1.618. Now the bullish CVD divergences played out, the probabilities locally played out as well, which is very, very nice. We had this bullish CVD divergence on the chart, target this high has been taken. More local bullish CVD divergences, target this high also taken. And then something I mentioned yesterday, which is something that I will look for as well, is grinding the resistance and keeping an eye for potential bullish CVD divergences against resistance, increasing the probabilities to pass the resistance. And as mentioned yesterday as well, if we pass this resistance, the probabilities are very high to take out the high, which has happened soon after, which is very, very nice. Now, at the moment, we are moving to the upside, bit of a local range here on the lower time frame, and we do have some interesting resistance to the upside, the daily here at 64.2k, and a weekly naked point of control at 65.1k. So it would be nice to hit that box, hit the resistance, and then observe what price is going to do there. So if we then look at the probabilities of the different scenarios, then on the daily time frame, the probabilities remain higher for the bearish scenario unless proven otherwise, meaning we're looking for an ABC zigzag to the downside, currently working on the wave 4. We can only really start to switch bullish if we hit 66.2k. That is when the probabilities increase for more bullish scenarios. So that's a very simple invalidation. Locally though, on the 1 hour time frame, we were looking for price to move towards the upside, especially after we passed the resistance and the bullish CVD is building. So interestingly, even though the probabilities on a daily are higher for the bearish scenario, locally, longs were definitely an option in this range and the probabilities were higher to move towards the upside, which is what we got now. Now on the 1 hour time frame, the new probabilities looking for price preferably to move into the resistance above, still waiting for a wave 4, 1, 2, 3, 4, and then a wave 5 towards the upside. Then observe the reaction in this area over here, and a zigzag at the moment has higher probabilities unless price would hit 66.2k. So at the moment an A, B, and then a wave C has higher probabilities than a wave 1, 2, 1, 2, 3, 4, 5, 4, 5 impulsive structure, simply because on the daily the trend is to the downside and the bearish bearish ABC has a higher probability at the moment unless we hit 66.2k. Locally, still waiting for a range to form in a wave 4, not a wave 2, that's a small typo, compared to wave 2. So preferably we see a 1-2, then eventually we got a wave 3, still looking for a wave 4, and a wave 5, where this wave 4 is quite similar in time compared to wave 2, that is most common. So at the moment we haven't yet seen a range that is the size of your wave 2 here, so remaining very patient. And I know the retracement levels for a wave 4 as well, take it from the low to the current high that we have, the 236 to the 382, with an interesting 1 hour order block here as well, right? And the invalidation 61.8k. So hitting the 61.8k level invalidates a wave 4. I hope that this video was helpful or valuable to you. Please check out the brand new complete Elliott Waves guide playlist I've made that shows you all you need to know about Elliott Waves. Thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.